Bitcoin just blasted through 105,000. Right now, some are happy and yelling to the moon, while others are panicking and bracing for a market crash. But here is a $1,000,000 question. Are you making key portfolio decisions based on strategy or emotion? Today, we're diving into the one tool that silently controls the crypto market's mood and maybe your portfolio too, and that is the Crypto Fear and Greed Index. Hi guys, welcome back to the channel. If you're new here, I am a Sui Network ambassador with over 4 years of experience in the crypto space, and over time I've been able to onboard hundreds of persons around the world to the crypto space while helping them get the best out of their portfolio, see early money making opportunities, and staying safe from hacks and market crashes. So in this video, I'll be using the experiences I've garnered over the years to show you why you should care about the crypto market fear and greed index and how you can use it to get the best out of your portfolio. From now to the end of the video, I'll be showing you 3 major things. 1. Understanding the crypto fear and greed index and how to read the fear and greed index radar. 2. How you can know what everyone feels about the crypto market anytime and any day. I mean, even from the comfort of your room. 3. How you can manage your portfolio using the crypto fear and greed index radar and also know when to anticipate market crashes or pumps. I would advise you stay till the end because I will show you exactly how smart investors use this index to make profitable moves, especially when everyone else panics. Plus, I will share some tips at the end that will help you optimize the index, get real-time market index updates, and stay ahead of everyone. Going into the first major part, what is the fear and greed index? 2 years ago, when Bitcoin dropped below 20,000 US dollars, the fear and greed index was at a low 8. This number transcended to real life and there was extreme fear in the crypto market. Everyone was panic selling, Twitter, now X, was dead silent, creators were silent, the market was deep red, projects were dying, news outlets were not helping either, as there were reports of crashes and hacks all over. Technically, the market had crashed. Fast forward to now, Bitcoin is currently over 100,000 US dollars and the index screams 74. This has also transcended to real life as there is greed in the crypto market currently. Everyone is happy, sentiment is good, people are panic buying Bitcoin and other cryptocurrencies out of the fear of missing out. Basically, the bulls are back and the greed index is high. So what is this thing? What is the crypto market fear and greed index? One thing you should know is that the core of the market index is the action of people. Knowing this would help you understand the crypto market fear and greed index as we progress in this video. The crypto market fear and greed index is a daily gauge that blends market volatility, social media sentiment, Google Trends, trading volume, trading activities from different traders, and surveys from people, and it rolls out a single number where 0 to 24 indicates extreme fear. This is where people panic sell the most. At these numbers, people can't afford to hold any volatile crypto assets at this time, and this leads to a high volume of market sell-offs. 25 to 49 range indicates fear. At this stage, people are necessarily not panic selling their crypto assets, but are still not confident enough to buy or hold large amounts of volatile crypto assets out of fear. 50 indicates neutral. This number shows that people are not sure whether to sell their crypto assets, hold on to them, or buy more. This is a confused state for everyone and limited decisions are made during times like this. 51 to 74 range indicates greed. Here people are starting to get confident about the crypto market. The market asset accumulation starts to grow and there are low sell-offs compared to the buys in the market. The 75 to 100 range indicates extreme greed. At this point, everyone feels confident about the market and most people tend to buy more crypto assets at these numbers. Creators begin to come out to tell people which coin to buy, news outlets start to give positive results, X and YouTube start to buzz, there's FOMO everywhere, and the whole market starts to pump aggressively. All these are good, but here's what you should know about these numbers and the crypto market fear and greed index. This index doesn't predict prices. It predicts people's actions, and people move markets. Using the index, when fear is high, everyone is risk averse. Traders and investors rush to preserve their assets and sell off their volatile crypto assets. When greed takes over, FOMO kicks in and everyone rushes to buy volatile crypto assets. Now, here is where the bombshell drops. Most people do the exact opposite of what they should do by following the index emotionally. I mean, they sell in fear and buy in greed. And this is wrong. Trust me, you don't want to invest emotionally, because making crypto investment decisions emotionally is why most people become exit liquidity when Bitcoin and other volatile crypto assets pump. To manage your portfolio properly and get the best out of it, you should not buy in greed and sell in fear. Here is a common investor trading cycle that would help you understand the actions of people during low and peak times. Market pumps, the greed index is high. The common investor rushes in to buy in a bid not to miss out on future market gains. Market reaches peak and starts to go down. The common investor who might have been in little profit starts to have losses on their investments. Market goes down badly, fear index is low. The common investor is now panicking and proceeds to sell their holdings at a huge loss out of fear of a deeper market crash. Now the market pumps again, the fear and greed index is up again, and the cycle continues. This is what leads to unprofitability and bad portfolio management. Here's another real-life example to help you understand more. March 2020, the COVID crash. Bitcoin dropped to $5,000. The fear index was at a low 10. People panic sold their assets and huge amount of losses were recorded. Fast forward to November 2021, Bitcoin peaked at $69,000. Greed index was at a high 95, and people who sold their crypto assets at huge losses in 2020 started investing again. A year later, in December 2022, Bitcoin was back to $16,000 and the fear index was back to a low 10. In these cases, those who followed the index emotionally bought the top and sold the bottom. But those who used it strategically, they did the opposite. And that will take us to the next stage, which is how can you use the crypto market fear and greed index in your portfolio management? The legendary investor Warren Buffett said, "Be fearful when others are greedy and greedy when others are fearful." This is what the index helps you to see in real time, the greed of people. Moving on, here's how smart investors use the index. 1. They don't trade emotionally. Whenever you feel like your emotions are getting the best out of you, please stay off the market. 2. When fear hits extreme, they start buying gradually. Here, the dollar cost averaging investment strategy, which we call DCA, is important. This is where you allocate a certain amount to invest, you divide it and buy in at different market levels or different index numbers. Probably your likes and subscriptions after this video will motivate me to make a video on DCA. 3. When greed is high, you begin scaling out or securing profits. You should always strive to take profits once you notice the greed index is becoming high. I'd like to state that this is not a trading signal, it is a sentiment compass instead. So the big question, where can you get the crypto market fear and greed index? There are so many sources that can be used, but I recommend using either alternative.me or CoinMarketCap because they are more accurate and are the most used. Kindly check the video description for the link to these sites. As promised, here are some tips to help you stay ahead of everyone. 1. Set alerts when the index drops below 20 or rises above 80. 2. Combine it with technical indicators for better accuracy, especially when you're a seasoned trader. 3. Use it to temper your own emotional reactions during volatility. Whether you have investments or not, you can always use this to train your emotions so that when the market is going up or down, you won't be caught off guard. Here's some bonus for you. Assessing the current situation with Bitcoin at over 100,000, almost at 107,000. What is the index saying this time? Well, with Bitcoin smashing through 100,000, we are in greed. That doesn't mean you sell everything though. It is a moment to pause, reflect, and act with discipline. Remember, it is not about timing the top or bottom, it is about removing emotion and sticking to a strategy. Do well to ask yourself, am I buying because of hype and emotion or because of strategy? Crypto is really emotional, but your decisions don't have to be. If this video gave you clarity, hit that like button and share it with someone who is caught in the hype right now. And if you're the one, do well to watch this video again. Don't forget to subscribe for more eye-opening content like this. Do well to stay safe, stay smart, and as always, zoom out, chill out, and always dollar cost average on your investment.